Imagine you're somewhere normal internet barely reaches. Maybe a remote work site, a rural house, or a place recovering after a storm. And somehow the connection still works. SpaceX is one of the companies trying to make that moment less rare by sending internet from satellites and launching the rockets that put them there. The name is Space Exploration Technologies Corp, better known as SpaceX, and on the stock market, it will use the ticker SPCX, the short nickname investors type in to find it. At the cursor stocks, the central question is simple. Is this a real business already, or a giant bet on what it might become? SpaceX was founded in 2002 and is led by CEO Elon Reeve Musk, with headquarters listed in Hawthorne, California. This isn't a tiny space startup showing investors a sketch. It's a company that spent more than 2 decades turning rockets, capsules, and satellite internet into something customers actually pay for. What does it actually do? It designs and builds rockets and spacecraft, launches things into orbit for customers, and sells satellite communication through Starlink. So the remote internet thread matters, but it's only one part of the machine. The same company is also moving cargo, crew, satellites, and national security payloads. The problem SpaceX exists to solve is that getting to orbit has always been painfully expensive and hard to schedule. If rockets can be reused, launches can happen more often. If satellites can be launched in batches, internet can reach places where digging cables makes no sense. That's the everyday promise underneath the science fiction feeling. The money engine has a few parts. SpaceX can charge customers for launches, sell satellite internet subscriptions, and build spacecraft or services for government and commercial missions. Think of the Starlink customer paying for connection every month. Then remember, SpaceX also owns the ride that gets those satellites above the Earth. The IPO is the moment a private company starts selling pieces of itself on the stock market. SpaceX is set to start trading on the NASDAQ on June 12, 2026, under SPCX. It plans to offer 555 shares, meaning tiny ownership pieces, and raise about $75 billion. While final pricing has not been set. Companies go public for practical reasons. Raise money, give early backers a way to eventually sell, and become more visible. Here, the raise itself is enormous. About $75 billion is not pocket change for growth. It's the kind of fuel a company needs when its ambitions include global internet, launch capacity, and expensive new systems. Here's why that number matters for a new investor. Last year, SpaceX brought in about $18.7 billion of revenue, which is money coming in before expenses. The IPO raise alone is about 4 times that revenue, so investors are being asked to fund a company at a scale much bigger than the cash it collected last year. The growth story is easy to understand if you stay with the remote internet example. More people, companies, ships, planes, and governments want connection where normal networks are weak. SpaceX has a rare advantage because it doesn't just sell the service. It can launch the satellites itself, which could make expansion faster and cheaper. The first bull case is launch power. If a customer needs to put a satellite into orbit, reliability and schedule matter. SpaceX's reusable rocket approach means the same basic hardware can fly, land, and fly again. If that keeps working, SpaceX can stay in front while others are still trying to catch up. The second bull case is Starlink. Satellite internet is easier to picture than rockets. A customer pays because being online matters, even far from fiber cables and cell towers. If SpaceX keeps adding coverage and keeping service useful, those monthly payments could become the steadier part of a company built around very expensive hardware. The third bull case is timing. SpaceX is coming public when investors already understand space launches, broadband, defense technology, and artificial intelligence as big themes. That doesn't mean the stock works. It means the story is arriving when Wall Street is already hungry for companies that look like infrastructure for the next decade. That sounds powerful. But there's a catch. Rockets fail, satellites need replacing, regulators can slow things down, and giant engineering programs can eat cash for years. That spending has a name: cash burn. How fast a company uses money to stay alive and grow before the business can fully pay for itself. The financial reality is the clearest reality check. In the latest full year, SpaceX had about $18.7 billion of revenue, but a net loss of about $4.9 billion. Revenue is how much flows in. Profit is what's left after the bills are paid. Right now, the business is still not keeping the money. Competition is real too. On launches, SpaceX has to watch Blue Origin, Rocket Lab, and United Launch Alliance. On satellite internet, Amazon and Eutelsat OneWeb want customers who need connection from space. The question isn't whether SpaceX is famous. The question is whether customers keep choosing it when alternatives improve. This is the part investors will argue about. A valuation is the price tag investors put on the whole business, and market cap is what the whole company is worth on the stock market. Because the final offer price and IPO valuation are not set here, the honest comparison starts with what is set: revenue, losses, and the raise. The cash question is practical: who gets the money and who keeps control? The offering is built around a huge capital raise for SpaceX, while according to reporting, Musk is not selling shares and is expected to keep about 82.4% voting control. Also watch the lockup, the waiting period when insiders usually can't sell yet. After it lists, don't try to follow every headline. Watch 3 simple signals. First, are more customers paying for Starlink and launches? Second, are losses shrinking instead of growing? Third, are big customers renewing or expanding contracts? If the remote internet promise is real, it should eventually show up in those ordinary business signs. So the balanced read is this: SpaceX has a dream people can understand and a business people can measure, but the gap between those two is still the risk. If you can identify what it sells, who needs it, what could go right, and what could break, you can read an IPO story. Follow the cursor stocks. This video is for information and education only, not financial advice.